When you look at the fact that building on the Bolt EV and EUV, the Hummer truck and the Hummer SUV, the Silverado EV, the Chevrolet Blazer EV, Equinox EV, the Cadillac Lyriq, the Celestiq. I mean,
even if all of light-duty transportation, not just GM, but everybody, was electrified immediately, you would have 75% of oil demand untouched by it.
Yeah, and we're seeing Tesla actually regain some of yesterday's losses. It's up about 1.5% in the early going because of this positive analyst commentary. The Lordstown Motors bankruptcy could also be giving it a boost.
I think we've seen that lack of consumer confidence in other names like Rivian, Lucid, that are just new players. You have to establish yourself that you will be sticking around for at least the midterm.
Is it about the fast chargers, though? Is that necessary as opposed to the level two chargers we see a lot of, or does it need to be even more ubiquitous? Do we need to have something like wireless charging in order for drivers on the sidelines to feel comfortable switching over?
We'll cover all that and more, so let's get to it. Despite all the negative Nelly analysts, Tesla experienced a positive day today. Will it continue tomorrow? Who knows? But let's do a round robin of the finance media and see if anything had an impact on Tesla stock today.
The Aspen Ideas Festival yesterday, Andrew Ross Sorkin spoke with General Motors CEO Mary Barra in a wide-ranging interview. Here's some of it.
Bank of America put out a report recently that said the challenging macro and shifting powertrain strategies are wreaking havoc on product planning in the EV space. This is cars broadly, not necessarily just GM. There's a significant acceleration of EV launches, greater uncertainty around new internal combustion engine launches, and likely more last-minute product cancellations. The next 4 years plus could be some of the most uncertain and volatile for product strategy ever. You agree with that?
Well, I think when you look at General Motors, it was back in 2018 where we said we believed in an all-electric future. We were already working on what our platform is, Ultium. And so we know the portfolio. Now, we keep looking, and I'll say adjusting it and tuning it as we see what's successful. But, when you look at the fact that building on the Bolt EV and EUV, the Hummer truck and the Hummer SUV, the Silverado EV, the Chevrolet Blazer EV, Equinox EV, the Cadillac Lyriq, the Celestiq. I mean, we have been working on a very thoughtful portfolio to cover the main segments. We're not trying to recreate our internal combustion engine portfolio. We're looking at the strength of the brands, what consumers expect, and what they tell us they want. And so I think we're going to have a very robust portfolio.
How many EVs did she mention? I think I lost count at around 8. It's one thing to listen to your customers, and it's another thing to let them drive you to financial ruin. Just because you do a census poll of 100 people and they tell you they want around 50 different products, you don't set off and try to appease all of them. You want to know why? Because the consumer is a moron. Many people don't know what they really want until they get their hands on it. The folks over there at GM need to be asking themselves, what do they want? If you want it, your customers damn sure will too. Tell them what they want and do it the best you possibly can. If you cater to fickle customers, you will go bankrupt. And as I mentioned earlier, I don't think the US government's gonna let you go bankrupt. So that means you're gonna be taking more money from me. Do not go bankrupt again, GM. Get your shit together. Focus on getting one of these vehicles right. Just fuck one, and then we'll go from there. You can do this, Mary Barra. I believe in you, because I don't want to have to pay for it.
You've talked about 2035. Zero combustion engines, really?
Zero light duty.
Zero light-duty combustion engines.
Right.
So Mike Wirth is here from Chevron.
Yeah.
So if you are him listening to that, do you think you're sitting there saying, I believe her and I really have to change my plans completely, or this could actually take a lot longer?
Well, I think first you have to remember the car park in the United States alone is 250 million vehicles. So even when we say in 2035 we're going to sell all light-duty vehicles will be electric, it's going to take time after that. But I know Mike Wirth, so I think he believes me. And that's what GM's going to do.
Right.
But, from a full-line manufacturer that is both internal combustion and EVs, we're the only OEM that has said that for all of our brands. So I think it's a commitment that we're making.
You've also talked, though, about the challenges of producing cheaper vehicles, so $30,000 to $40,000 vehicles, and doing that profitably.
Right.
That's going to take till when now?
Well, a lot of the vehicles that we're putting out right now, as we get to scale, because we've brought battery manufacturing inside, we have plans, and we've said, I don't talk about individual product line profitability, but we're on track for 2025 to be in that low mid-single digits, and that's before IRA.
Right.
And then we've said, later in the decade, we're going to be at parity with ICE. So a lot of it is going to rely on continuing to improve battery chemistry and getting cost out of the battery, because that's where the cost opportunity is.
Oh, I just want to take her at face value, but I know this is a bold-faced lie. This is why GM discontinued the Bolt. It was not profitable to continue that vehicle lineup, and it wasn't going to get any better. The Model S, back in 2014, spurred the electric vehicle movement. GM created the Chevy Bolt. Nissan created the Leaf. And all of that stuff didn't really pan out. As a matter of fact, they were losing money, and those cars were absolute shit. They refreshed the Bolt and still could not make that thing profitable. This is not a good track record, people.
Idea that there will be vehicles that you will sell effectively, unprofitably, to seed the market, if you will.
I would say, we're going to where we know the consumer has to be to get to the volume, and we're going to drive to profitability as quickly as possible. And then when you put things like IRA on top of it, along with the software services, I think we're going to see profitability even in those affordable vehicles more quickly than anyone's expecting.
And all of this, you think, is now going to happen even faster because of your deal with Tesla in terms of the charging stations?
Well, I think what was important there was we had access, General Motors customers had access to about 13,000 chargers in the U.S. That doubled it.
Was there like a moment you're like, oh, okay, we're doing this. It might be the right decision, but it's hard.
I would say, I think one of the things our industry could do is partner more. We've done partnership deals with Ford in the past on transmissions. We have a, partner on many things right now with Honda. I think our industry could be even more efficient. And we saw this as an opportunity for General Motors. We were able to save $400 million.
But can you take us behind the scenes? Does Elon Musk call you up on the phone and say, hey, Mary, you want to do this?
We actually text each other.
You have a texting relationship?
Yeah,
not Signal, it's text, straight?
I mean, we've met before on a handful of occasions, and we text each other.
No DMing on Twitter now?
So I texted him.
Let me ask you about autonomous vehicles and Cruise in particular, which I know you're very excited about, and you're adding a number of cities, including Houston. You've talked about this being a $50 billion revenue business in less
2030.
But that's 7 years from now.
Exactly.
This is about $1 billion business today. Not even. It's I'm sorry.
Business we've said by 25.
Uber is basically a $30 billion business annually. Just help us with the numbers.
Well, I mean, I think when you look at, you open up the addressable market when you get the cost down. And if you think about in today's rideshare, what the most expensive component, it's the driver.
Right.
And when you replace the driver with technology, and Cruise has all their technology roadmaps to get the cost out of what that vehicle would be, I think we're going to get the cost to a very reasonable point, which will open it up. And then when people see the quality of the ride, when they get in an Origin, and you can share rides but really have your own space, or it can be space for yourself. And then you look at the opportunity for personal autonomous vehicles.
Right.
It opens it wide up. So having now taken several rides and knowing the plans, I couldn't be more excited.
Looking at that Cruise, they're going to be operating in Houston. I can't wait to see them around and see how well received it is in the H. But it's not a generalized solution. Tesla's full self-driving can be driven anywhere, not just within these confines of the greater Houston area, but FSD could end up taking you from downtown Houston all the way to College Station, all the way to University of Texas, all the way to Dallas if necessary, because it is a generalized solution, while Cruise will be confined to the city limits of Houston. And God forbid if there's construction. Now don't get me wrong, FSD struggles with construction too. It's thinking though. While Cruise, when faced with a difficult decision that its pre-mapped configuration has suddenly changed, will probably roll over on its back like a helpless turtle and then leave you stranded. That's not an ideal situation.
At the Aspen Ideas Festival, Andrew spoke with Chevron CEO Mike Wirth about the impact of ambitious EV goals by automakers on oil demand for the future.
Even if all of light-duty transportation, not just GM, but everybody, was electrified immediately, you would have 75% of oil demand untouched by it, because that goes into ships, it goes into off-road, mining, agriculture, long-haul trucking, aviation, petrochemicals, a whole series of things that cannot be electrified today. And so the demand for our products is likely to continue to grow, even as we see great progress on EVs, even as we see great progress on renewables, because the population of the planet grows, the number of people living a middle-class lifestyle continues to grow, and all of that is driving energy demand higher.
Oil ain't going nowhere, folks.
Caroline Woods with me at the desk at the New York Stock Exchange to talk some positive notes this morning. I think this is pretty important because we hit the alphabet cut with Renita. Yesterday there was an alphabet cut. There was the Tesla cut. This morning we see the other side of the aisle show up.
Yeah, and we're seeing Tesla actually regain some of yesterday's losses. It's up about 1.5% in the early going because of this positive analyst commentary. The Lordstown Motors bankruptcy could also be giving it a boost, because really I'm taking a look at my watch list now and I'm seeing strength across the board. Tesla up 1.5%, Rivian up 2%, NIO up 4.5%. Lucid up 4%, even Fisker up about 2% right now. So it could be tied to Lordstown Motors bankruptcy. But Baird is out with some positive commentary on Tesla, calling it a best pick of the year. And just to kind of, remind everyone, Tesla got its fourth downgrade yesterday from Goldman Sachs in a week. So the sentiment has definitely been turning a bit more cautious on this name, but Baird is holding firm that it's a top pick for the year. The analyst made no change to his outperform rating, and this, of course, comes ahead of its production and delivery figures, which are due out this weekend. He does tell investors in a research note that he's cautious heading into those numbers because sentiment for the quarter is pretty negative. But he thinks the results will be a de-risking event. Also sees it as a low point for gross margins. Of course, gross margin is going to be a key figure, the outlook for that. So Baird has a $252 price target on Tesla, which implies about $10 upside from where it's currently trading. Meanwhile, we also heard from Piper Sandler on Tesla this morning. The analyst there is expressing some caution heading into these delivery numbers and actually looking later out into the year, saying regardless of the outcome this weekend, we wouldn't be surprised to see profit taking in the coming months. Keep in mind, Tesla up almost 100% this year. Also warned about some operational hiccups. That said, he stuck with his outperform rating and $280 price target.
And with the best pick
bullish
label too.
Yeah, and
with kind of some major caveats to it though.
True, but obviously
taking risk. Other hurdles.
It's up 100%. Who wouldn't be taking profits at some point when you're really looking at those kind of gains? But sticking with the outperform rating, did also note that his estimate for delivery numbers for Q2, 469,000, actually may be a tad high. The FactSet consensus is for around 445,000. So maybe just setting the stage for some potential disappointment. Going to also be focused on the gross margin outlook, saying prices have been stable, but price cuts in Q3, if any, could reignite concerns about margins. So Tesla shares actually basically flat now. So gave up the 1.5% gain that we talked about. So now still down about 6% on the week, but still up almost 20% in June.
A lot of information to digest right there, but let's keep it simple. The big key takeaway is margins. The price cuts that happened in the beginning of the year should be impacted this quarter. Tesla did a U-turn when it came to pricing and started raising the prices, so many people think this will be the valley when it comes to the margins. But I hate to tell you this, Tesla will continue to drop the prices as necessary. And that isn't necessarily on the back of something like demand, which is an incredible trigger word for many investors. Waning demand, weakening demand. Newsflash, you're not gonna have to worry about anything like that this decade. The demand is only going to increase exponentially. It's just a matter of whether or not the consumer can get their hands on the products. I'm a firm believer that Tesla will break many records coming up here in Q2, and that gross automotive margin will surprise many analysts. Even the bulls who urge caution will be shocked at some of these numbers released by Tesla within the next month.
This morning, not a lot of response to this note, with the shares a little changed. To your point, some strength in some of the other EVs too, though, after Lordstown Motors files for Chapter 11, which I feel like was probably the least surprising of all our new vehicle automakers over the last couple of years. A lot of folks kind of had this on their radar as a risk point. However, and they basically blame the relationship with Foxconn.
Right.
And
sounds like there could be some legal battles brewing there.
For sure. But I'm still kind of surprised to see some of the other companies like Lucid necessarily up on this. Like, I'm not sure it's super bullish as a startup automaker to see other startup automakers go to Chapter 11. No matter the scenario, even though they might be so different companies along their, process of building out the business, they went to the public market at roughly the same time. The stock charts look pretty similar.
Elon Musk says they could be heading for bankruptcy
Elon
as
warned
well.
us about this.
You take a look at Lucid. It is down 25% this month alone.
Yeah,
so, to see a 4% pop isn't necessarily making a huge, trend shift by any means. It's still, quite a ways away from the highs.
Investors are crazy. Lordstown Motors will just be one of many. Lucid and Rivian, they're a little bit further in that journey, but they're nowhere near out of the woods. And if you're not careful, you too could become a victim of Chapter 11.
Now for a look at developing stories this morning, I'd like to bring in Jenny Horn, markets correspondent, to take a look at this one, Ride. We're looking at Lordstown Motors going bankrupt. This is an EV stock, one that we were following closely, and there was a lot of speculation about this name a long time ago.
Right, Nicole, I think if you've been following this name, this news wouldn't come as a complete shock, just given the fact that they have had their fair share of difficulties getting started really as an EV maker. But we did get news they did announce the strategic restructuring process. And as part of this process, they filed litigation against global technology company Hanhao Technology Group and some of its affiliates, that being Foxconn, in the U.S. bankruptcy court for the District of Delaware. Now, the company does believe the litigation details of Foxconn's fraud will be willful and consistent with some of the company's overall failures for its commercial and financial commitments to the company. So to me, it sounds like they are blaming a lot of this on the woes, of course, related to then Foxconn. They said Foxconn's actions led to material damage to the company as well as its future prospects. In addition, Lordstown is commencing a marketing and sale process for its endurance vehicle and related assets. To accomplish this, they are restructuring under Chapter 11 of the U.S. Bankruptcy Code and, of course, the U.S. Bankruptcy Court. They further anticipate that the restructuring will enable an expedited timeline for hearing in terms of Lordstown's litigation against Foxconn. Now, Foxconn, this really centers around the partnership they had with its management team that has also pioneered a lot of its technology and engineering, as well as its supply chain capabilities, and positioned to form, they said, a new scalable joint vehicle development platform. So it sounds like they are trying to do all they can to keep their company above water here, but I think this doesn't necessarily bode well if you are already somewhat not fully trusting of the overall EV space. There's so many newcomers, and I think there is the thinking that if you're not able to back a lot of your technology in your vehicles, why would I purchase a vehicle from you if, say, the company will go under and I have a vehicle that operates very specific to your technology? I think we've seen that lack of consumer confidence in other names like Rivian, Lucid, that are just new players. You have to establish yourself that you will be sticking around for at least the midterm if a customer is going to then purchase a vehicle from you, or else why wouldn't you take your money to, say, like a Tesla? I think that's something that's concerning. Tesla shares, though, having a nice day, up 1.5%. Lucid also up 3%. We are seeing green arrows across the board in the autos today, alongside the overall market strength.
Two key takeaways. Don't rely on anyone else for your success. When you look at a company like Tesla, they do everything in their power to make sure they're not reliant on anyone else. That's because they have a great understanding of the manufacturing process, supply chain. Any one hiccup of something that you desperately need to get the car off the line hurts the bottom line. And anything that hurts the bottom line has to go. Lordstown Motors learned this the hard way, Chapter 11 style. All the buying Lucids, Rivians, you are better than me. If I bought a vehicle and I didn't think that company was going to be around to help me with that vehicle later, I'd be hotter than a rattlesnake in the sun, my boy.
When we look at what went on with Lordstown, it was via SPAC, and a lot of those SPACs overall didn't do particularly well, but this one, as they file for bankruptcy today, down over 30%. Jenny Horn, thank you, markets correspondent. Appreciate it.
To win as Volvo joins its ever-growing network of superchargers following suit of major manufacturers. With more insight, let's bring in Greg Migliore, the editor-in-chief of Autoblog. Greg, let's start with the Lordstown story because, this is a pretty short run, even for a startup founded in 2018, filing for bankruptcy 5 years later. How much of this is specific to Lordstown? How much of this is a symptom of what's to come in the EV space?
Well, I think this is a really indicative of how, startups can basically fare if they don't have the capital that's required to maintain the momentum. There's an old saying in the car business that you need billions, not millions. Lordstown barely had millions. They were trying to get that $170 million investment from Foxconn, and that was like lifeblood. $170 million is like change of the seat cushions for Ford or Tesla or Toyota. So they didn't have the capital that they needed to make a long-term go of it. So we'll see. I think there's a lot of startups out there that do have compelling products. They just need to have the business case. They need to have that customer niche to have that staying power. And as you can see, Lordstown didn't really have it at this point.
Greg, do you think Lordstown has some assets that some of the larger players within the space would be attracted to, would be interested in?
They have an electric truck that is fully formed. I've driven it. I'm one of the few people who have and maybe ever will. We'll see. It's a decent truck. It has a respectable electric range. It's capable. It's marketed at more of like a work segment. So they did have a defined plan. They just weren't really able to execute it. If you were looking to have like a turnkey operation with a factory, depending on how the potential litigation with Foxconn works out, it's all right there. Like if you walked in with, say, $1 billion or something, maybe you could, get this off the ground and you wouldn't have to do the product development or some of the testing because Lordstown's already done that for you.
Question is, who's willing to take that technology on board, polish that turd, and see if there's a dime in there? Leave your guesses in the comments below. It would just be a shame to waste all of that technology, all that ingenuity.
See more consolidation in this space. Lordstown, sure, to Shauna's point, we have seen them raising the red flag for a while. No real surprises here, but what about some other names that, at least from an investor standpoint, haven't necessarily gotten sort of the support, and there's a lot of concerns around just liquidity?
Yeah, I think when you look at Lucid, Rivian, Fisker, these are all like newer companies that have, much less capital to work with than the traditional automakers. I think they're all companies that you're going to want to watch. You're going to see, potentially we could see some M&A there, which I think could make some sense. A lot of these companies, like Rivian has 2 products, Lucid has 1. It would make sense for perhaps an existing automaker to reach out and maybe augment their portfolio by perhaps snapping up one of them. That could be a good strategic play. As the decade rolls on, some consolidation, some mergers and acquisitions. I think some of these companies, just organically, will probably go the path of Lordstown as well.
Greg, what do you think this means, or does it mean anything just in terms of EV adoption? The fact that if you have a name like Lordstown, some of the other smaller players within the space struggling to survive, is it going to have any impact, do you think, on getting more EVs on the road?
In this case, I don't think you want to read too much into it. I think Lordstown was a fairly niche company. They had they were like a work truck company, if you will. So I think, are they a sign for what other, startups could happen to them? Potentially. But at the end of the day, Ford, General Motors, Tesla, Toyota, you name it, they're investing heavily in electric vehicles. And consumers are going to have a lot of choices out there. They're going to have a lot of different options, a lot of different dealerships. So they're going to have options. If you're a consumer, you're probably actually not thinking of a startup because many of them are actually expensive or sort of narrow use cases. I think the mainstream automakers and Tesla will have far more options going forward.
That raises the question, how much of this in terms of adoption is about the car itself, how much of it is about the range anxiety and having the infrastructure in place. There's a new study out that points to just where the adoption is happening. Some interesting numbers, though, here from iSeeCars.com pointing to Hawaii, Oregon, Vermont, Washington, and California seeing the lowest growth in EV growth, we should say. So California, take that as an example because we have seen massive adoption there. We're still talking, just over 15%. Nationally, about 10% roughly, maybe a little under. Is that kind of the tipping point? In other words, it's easy to get to maybe a 20%, but getting beyond that is an even bigger hurdle.
Don't worry, my guy. Let me fill this one. EV demand is growing exponentially. Some regions will grow slower than others. When you're looking at the West Coast there, California, Oregon, and Washington, they had incredible early adopters. If you're looking at these studies from this lens, you may become under the impression that, whoa, maybe the sentiment for EVs is waning, and you would be sorely mistaken. The cost of electric vehicles is going down predictably. Over time, the total addressable market for these vehicles will explode. That isn't theory, that is an assumption. When Tesla releases their next generation vehicle and the price point is somewhere under $30,000, there will no longer be an EV adoption curve. It will be a vertical line. But let's see how our friend answers this question.
Are there, they exist. There's a lot of great EVs. I've driven many of them. Right now, the next part of the equation really is the infrastructure. You know, how easy is it going to be to charge your EV? Where can you do it? What kind of plug will you be using? That's like the next great, unknown, if you will. And, you're seeing different companies are doing deals with Tesla now to get on the supercharger network and things like that make it easier for consumers. And that's really the next big part of the equation. It really is the network.
If Tesla was making 10 million EVs right now this year, then I would be like, yeah, there's not a whole lot of infrastructure and people might have pause, but they're gonna make 2 million this year, roughly. And every other electric vehicle maker is making less than that. So if you add it all up, we're not replacing everything right now. It will be a gradual progression dictated by the production of each auto manufacturer. So while EV charging infrastructure is still growing, that is less of a concern for the individuals that are able to buy the cars at this moment, which is a limited number because there's only so many to buy. Not to mention, most of EV charging is done at home. I think the number is 90%. It provides ample time to expand the charging network adequately.
Is it about the fast chargers though? Is that necessary as opposed to the level 2 chargers we see a lot of, or does it need to be even more ubiquitous? Do we need to have something like wireless charging in order for drivers on the sidelines to feel comfortable switching over?
So, I mean, not to be a cop-out, but it's all of the above. I mean, it really has to be a situation where when you pull into like a charging station, it's accessible, it just works, and that it's quick. You really need to have whatever your EV may be. It has to be capable of fast charging, and most of the new ones are. And you need to be able to do that at whatever roadside, place you're going to. It's got to be basically like filling up your car with gas.
Correction, it has to be better than filling up your car with gas. Take it from someone that hasn't touched a gas pump since 2020. I agree with a lot of what he's saying. I think he's adding more weight to these concerns than are actually necessary. Some individuals that don't have home charging may experience some mild discomfort when it comes to charging your electric vehicle. There will definitely be some range anxiety associated with not being able to charge at home. But all the other benefits of an electric vehicle are just better than a gas-powered car. Less maintenance, better performance. I could go on and on and on. Even if somebody is frustrated with their EV, regardless if it's a Tesla or not, the benefits far outweigh the consequences of not owning a battery electric vehicle.
10 years, maybe. I don't think it's going to necessarily be like a 2 or 3 year thing, just because there's so many challenges to getting above, like you said, that 10, 15, 20%. Like right now, there is enough infrastructure to service the people who are early adopters, who are really into electrics. But once you get beyond that, there's millions of people in this country, and you need to have a lot of options, and it all needs to work. And I think that's a really big challenge right now.
Let's not get it twisted. Not a lot of people are going to be ready for electric vehicles, and that's okay. But I'm calling on this guy and many others that think the adoption rate will slow or curb somewhere around 15-20%. You can look at other examples, the European market, the Chinese market, and if you still think that America will taper off, you're out of your mind. Especially as EVs drop in price, governments will also continue to spend in order to make this transition happen. With each passing day, adopting an electric vehicle becomes easier for more and more people. When we get to 2028, many individuals will be driving around in battery electric vehicles. You're going to see charging infrastructure everywhere. There's going to be many companies trying to profit from the refueling of battery electric vehicles. Well, that's all I got for you today. Be easy. Peace.